Okay, thank you very much for the opportunity to talk to you today. So I'm going to provide you with Drury's outlook for seafarer availability and manning costs. So my starting point for that will be firstly to talk about the sources of the information I'm presenting to you today before I then move on to look at the recent trends in availability, in costs, and we'll then look at the outlook for those two key dimensions, particularly looking at this issue around availability, very topical right now. So in terms of the principal sources of information I'm presenting today, as many of you know, Drury publishes an annual report on the seafarer manning market. The cover of last year's report is up on your screen there, and we've been publishing this for around 15 years now. We publish this normally at the end of May, beginning of June, so the timing of this event means that we haven't completed all our research yet. So therefore, what I present to you today is very provisional, and we will be completing our assessments and our forecasts, which will be published in a month or so's time. So just bear in mind that what I'm sharing with you is very much provisional. And then we also publish a report towards the end of the year which looks at vessel operating costs across the main cargo carrying fleet segments. So this takes on board many of these manning market elements and incorporates this into these assessments that we have across all these different vessel types and sizes. The principal way that we go around gathering the information around the manning market is through surveys that we undertake of employers. These surveys cover at the moment around 65 companies employing over 40,000 officers across operating on deep sea trades. Okay, so let's firstly look at this issue around availability. So this chart is showing Drury's assessments of the supply of seafarers for the top 11 seafarer supply countries. There are obviously others, but these are the top ones as we see it. Now, to be very clear, our definition of seafarer supply is not the same necessarily as maybe some others. So our focus is seafarers that are likely to crew on deep sea trades, right? So we do not include non-cargo carrying vessels. We do not include a number of smaller coastal or inland barges, etc. We do not also include hospitality staff working on cruise ships, but we do include larger cruise ships and large ferries in our assessment. So make that very clear. You look at these numbers, you say, hang on, the Philippines supplies far more seafarers than that number there. Absolutely, but we must understand the way that we are defining the market in those terms. So the leading seafarer countries will be of no surprise to you at all. In terms of the growth in the supply of seafarers, then India has led the march in terms of the growth over the last 10 years, as the chart is showing you here. And that is significant because they're already a significant provider of seafarers to the global market, whereas some of the other Eastern European countries have seen rapid growth. Obviously, their actual numbers of seafarers they're supplying is much less, and therefore that growth is less significant. What we have seen recently is a decline in the supply from Russia and Ukraine. No surprises there, but lots of issues that it's created for many operators. Now, as we've been talking about today already, and will no doubt be a theme of this conference, is this rapid slowdown in the supply of seafarers over the last decade. And so we're illustrating that here on this chart. So the blue bar is showing you the average year-on-year percentage growth in supply between the years of 2013 and 2018, so the midway through the last decade. And the brown bar is showing you that same growth, but it's over the last 5 years. There's been a big slowdown. So the average annual growth rate was around 3% in the last decade. That has slowed in recent years to just 0.5% a year. Really slow, indeed almost stagnation. Now, there's a number of reasons for this that you'll be very familiar with, but essentially, seafaring has become less attractive, relatively speaking, to other occupations. And particularly if you look at the major seafarer supply nations come from the developing world, where standards of living have risen, and there's far more career opportunities than there were previously. And therefore, seafaring is having to compete in a very competitive global market for labor. Also, the COVID pandemic has been terrible for seafaring for many of the reasons that have already been discussed. It's been terrible in terms of the reputational damage in the market as well. And it's had a big impact then on the slowdown in supply in recent years. I'll a bit more on that in a minute. And also, obviously, this conflict in Ukraine is having a factor as well at the moment. Now, in terms of the demand for seafarers, the principal driver of that, as you all know, is essentially the number of ships in the fleet. Less so the capacity of the ships, it's really about the number of ships. So this chart is then showing you over the last 10 years the growth in the number of vessels in percentage terms across the different cargo carrying segments. So no big surprise, LNG is by far the fastest growing segment. That has created big problems, or big challenges, I think, in terms of hiring staff with the necessary experience and certification to crew those particular vessels. But also there's been very strong growth in the dry bulk segment. That is significant just because there are so many of these dry bulk ships already. So a sizable percentage growth there has a big impact then on global numbers. If we then quickly move on to looking at some of the cost elements, I'll skate through this a bit because it's perhaps of less focus, I think, for all of you today. The way that we differentiate between the different manning cost elements, I would have thought it'd be very familiar to you in terms of dividing out the wage costs from victualling, travel, etc. In this chart here, we are comparing the year-on-year growth in wage levels between the dry sectors and the tanker sectors for different ranks of officers. The interesting thing is that over the last few years then is that the wage rates in the dry segments have tended to outpace those in terms of growth compared to the tanker segment. This is measured in dollar terms, so some of this is to do with currency and the fact that a sizable chunk of tanker seafarers are supplied from European markets, where predominantly they're paid in local currencies or typically euros, and therefore, because of the strength in the dollar, then the rates of pay increase there in dollar terms do not look as great as they may have been on the dry side. But also there has been a propensity to raise wage rates, particularly on the dry freight segment, because of the lower prevailing rates at the time. Foreign currency and exchange rates is a key factor in terms of the reward level that the wage rates are for seafarers, and the strength of the dollar has been a positive in that respect, in that despite relatively low annual increases in wage rates, that in dollar terms actually for many seafarers those wage rates have been quite competitive compared to their local markets and to shore-based roles. So let's now come back to the issue of availability for seafarers. I think firstly, before I look at the outlook, as well as carrying out a theoretical estimation and outlook for the availability of officers in particular, it's officers that we're particularly interested in because of the gestation period to get them through training and certification. We also, in our surveys of employers, we ask them to rate the availability of different ranks of officers supplied from different countries. And that's what we're trying to show you in these two charts here. So the top chart is for senior deck officers and the bottom chart for senior engineers. And so when we ask the employers to rate the availability, either they're rated as immediately available or usually available or scarce. And you can see that in the color coding. Unfortunately, the color coding is different between the two charts. This might be slightly confusing. My apologies for that. But I hope you can get the general theme of what we're looking at there. So what the reports that we get, despite this theoretical shortfall I'll come to in a minute, is that we are generally getting the impression from the employers that we survey is that availability is manageable at the moment. There is pockets of scarcity reported, not surprisingly, in Russia and Ukraine, and also from Chinese crews as well. There's been a tendency of Chinese seafarers to seek more work on more coastal trades rather than international trades. Now, we're seeing the same trend, the same feedback, really, in relation to junior officers, which we're showing here. Again, the same areas of scarcity in terms of the countries of supply. The supply from Ukraine and Russia has seen a big fall. These two charts are plotting over the past few years the supply of both ratings and officers from those countries. If you look at Russia, we've seen an 11% fall in overall supply over the last 2 years, and from Ukraine, that fall has been as much as 14% over the last 2 years. So what does this then mean in terms of overall availability and also in terms of the outlook for this availability? So we're looking here at officers, and in this chart, the blue bars show the theoretical shortfall of officers by year. And then the two lines are tracking on the right-hand axis the total supply and the total demand for officers across the global deep-sea trading fleet. Now, as you can see, and I emphasize this is a theoretical measure, it's not necessarily an actual measure, but what it does do is it provides an indication of trend and tightness in the market. Because clearly no vessels have failed to go to sea for lack of officers. So what we see is that in the years leading up to 2019, we saw the market move towards equilibrium as the supply of seafarers was reasonably okay and the growth in the fleet was very modest, right? So 2019 obviously was just before this pandemic broke out. Now, since the pandemic has broken out, you can see that the shortfall has risen significantly. So as I come back to before, whereas we saw officer supply growth averaging around 2.5% a year in the period prior to 2019, that slowed down to just 0.5% in the recent years. And in fact, this year, we estimate that the supply will have contracted by around 0.5%, okay? So that's certainly of significant concern. So we estimated last year that the overall shortfall was around 35,000 officers. That equates to around 5% of overall demand. This year, we think that has increased to about 50,000, which is equivalent to around 7%. Again, these are theoretical numbers. They're clearly not actual numbers. Over the next few years, we think that the shortfall will increase. It will increase to around 70,000, theoretically equivalent to around 10%. Now, in relative terms, this level of technical shortage is very high. So the last time we were at this kind of levels was back in 2013, where we estimated the shortfall was around 5%. So we've already overshot that. So it is quite a significant tightness in the market that we're seeing. The good thing is that we think that the supply growth will increase. So we're already seeing signs of that supply growth improving to around 1.5% a year. And that's really to do with the acceleration now of training coming back after the restrictions that we saw over the prior years through the COVID pandemic era. But of course, we're seeing this acceleration in fleet growth, and of course that growth is generating a demand growth which is outpacing this improving supply situation, and hence why we have this tightness in the market. Now, I guess this raises then a number of key questions then around what does this mean and where do we go from here? I think the first thing is to ask the question of what the impact then was of COVID-19 and whether the impact of the COVID pandemic is going to have a long-term impact on overall supply. So from our analysis, it did have the effect of accelerating retirement rates. But if you look at the cohorts in the age range between 30 and 50, actually retention rates remained pretty good. So we do not think that going forward there will be a long-term systemic effect on overall seafarer supply as a result of COVID, however damaging that period was. In terms, if the other question I think is raised is to what extent this phenomenon compares with wider industry experience. To what extent are we seeing this mirrored across many other sectors of the global economy? And what factors are therefore unique to seafaring? So I think what is unique to seafaring is that it has become less attractive, and therefore the industry has to work harder to attract more seafarers into the trade. But if you look today, labour markets are tight everywhere. And labour markets everywhere have been very badly impacted by the outbreak of COVID-19. It has a devastating effect across many sectors, particularly bad for seafaring, but pretty bad everywhere else. So labour participation rates are down across the board at the moment. They are recovering, and most economists expect them to recover. Most economists expect vacancy rates to fall and unemployment rates to rise slightly over the next few years. And we're seeing that trend also in terms of our projection, what will happen in the seafarer market. But I think the difference is that there is an issue still over this relative attraction of a career at sea relative to shore-based roles. I think the other thing to think about in that comparison is to look at the comparisons in your businesses between seafaring and shore-based roles and the turnover rates and availabilities there. And I suspect that many of you will find that actually turnover rates and retention rates for shore-based roles are actually probably more challenging in certain geographic areas than they are at sea. And in terms of what the industry can do going forward, I feel uncomfortable as a modest analyst telling experts how they should run their business. But I think that the initiatives that were announced earlier in terms of the bringing together stakeholders to find solutions will be very, very important to that. I don't think that looking to increase female participation in the workforce by any significant margin is going to be any kind of silver bullet, because I think that there are too many societal holdbacks that will hold back many women from seeking to move away from their homes to take a career at sea, across many developing countries in particular. But I do think that by focusing then on the retention and the training of the cohorts between the ages of 30 and 50 particularly will be very significant, as will this recognition of providing a better work-life balance through shorter tours of duty and the like, and a big focus then around mental health. I think you all know that, so I'm not telling you anything that you don't really know already. Just briefly looking at cost evolution, obviously the rate of change of manning costs varies then from year to year across each of the cargo carrying segments, depending on where they are in the shipping cycle. I'm trying to illustrate that here on this chart. So at the moment, of course, the wet sectors are doing very well at the moment, but of course dry segments are starting to struggle with the downturn in the overall economy. What we do though is we take all the manning costs across all the different cargo carrying types, and we create an index of what we call manning costs, and we're showing that here with this brown line. The dotted part part of that line is just the bump that we saw over the COVID-19 pandemic period. And we're comparing that then with the evolution of worldwide consumer price inflation. And that's shown by this blue bar here. Now this year, we think that overall manning costs will rise by around 2.5%. I think the number up on the chart is incorrect. My apologies for that. And this is a faster rate of increase. This is all in dollar terms than we've seen in recent years. These levels are relatively low, but of course in dollar terms, when you convert this back into local currency, this leads to a higher rate of increase in local currency terms for seafarers themselves. So we think that going forward, we're going to see a similar inflation rate over the next 5 years in terms of manning costs of around 2.5% over that period. This is higher than we have seen of late, and that reflects really the tightness and the increasing tightness across the seafarer market. Obviously, there'll be huge variations between different cargo carrying segments, different geographies, different nationalities. These are just global averages representing those broad sort of trends. So if I sum up then, there is clearly an issue at the moment with regard to availability of seafarers, particularly around officers, which is a concern, but we think that the supply rate is starting to improve and will improve. The problem, though, is that the demand for seafarers is rising at an even faster rate because of this significant growth we're seeing in the fleet. And therefore, because of that tightness in the market, we expect manning cost inflation to accelerate modestly then over the next few years. Thank you very much.